So if you're trying to buy a home and the credit might be the issue that's getting in the way, in today's episode of Homes, Loans, and Ice Cream Cones, I'm going to go over some proven strategies of how we can boost your score and get you into a new home. I'm Scott Thompson with Paramount Residential Mortgage, and here are a few tactics that we use that can help. Most people think negative or late items is what's holding their credit back. It's actually just the opposite. It's people that lack positive credit items to counteract the negative is what keeps your score artificially low. I've nicknamed our proprietary credit repair method, trim the fat, build the muscle. Don't get confused though, building the muscle is the most important part of the process. The three biggest determinants of your credit score, number one is payment history. Number two is credit card utilization. Number three is the average age of all your accounts. Payment history, we're going to fixate mostly in the last 12 to 24 months. So whatever happened in college, whatever happened when you're young and dumb, medical bills, when life came at you fast, all those kind of factors are very easily forgotten. Most people think bad credit is like a tattoo or a brand. It's really more like a bruise. If you stop punching yourself in the arm, it gets better pretty quick. Anything negative that's over a year or 2 years old is pretty quickly forgotten. The number one thing we're going to look at is what positive accounts you have that are over a year old that are reporting, not counting student loans. So when we take all that away, most people just have a lack of credit as opposed to bad credit. The number two factor with credit card utilization, they want you to be below 25 to 30% to have the best score. 8%, maybe 10% max is like the total sweet spot. Sometimes it's better to owe $50 on a credit card than to owe zero. When you go over 25, 30%, that puts negative pressure on your credit score. When you go over 50%, you're considered maxed out on that credit card. When you actually get the maxed out at 90 to 100%, there's red lights going off that really, really hurts your score. And then going over the limit is like having a late pay on your credit. Now the best part though is that's very easily fixed. Two ways we can fix this. Number one, the old-fashioned way, just pay your bills down. If it's a few $100s, it's pretty easy. If we're talking $8,000 to $10,000, it's a little more difficult. In those situations, the best way to do it, our cheat code for this process is call the 800 number in the back of that card and ask the operator to raise your credit limit. If you've had that card for over a year, if you've been a good customer in that particular case, you should have no problem getting that raised. When you call, they're going to ask you how much did you want to get it raised. Turn it around on them. Just say, well, what am I eligible for? It's in the computer. They're just going to look it up. It's like, we can add $4,000. We can add whatever amount. Whatever you can get, just go for it. Every dollar that they raise that credit limit creates a little more space, a little more capacity, a little more utilization that will dollar for dollar raise your credit score. Now the important part, stop using the credit card. Do not spend up to that new balance or you're going to be even in worse shape than you were before we started. The third major factor for your credit score is the average age of your accounts. If everything you have is only 3 to 4 months old, not as great as if it was 3 to 4 years old or even 10 to 15 years old. So a lot of people, especially first-time home buyers, you just don't have a lot of history. Especially if we take out the student loans, sometimes there's not a lot there. Or if you had some credit issues in the past and you kind of shut it all down and you haven't, jump-started and reestablished any new credit, that holds you back as well because you're an unknown commodity to the credit bureau. So if you find yourself in the shorter end where everything's a year, 2 years old, maybe max, one technique that we use to establish is an authorized user credit card. Now, what's an authorized user credit card, you might ask? You're basically gonna borrow someone else, loved one, family member, best friend. You're gonna borrow someone else's credit history to help beef up your credit report. The way this works, let's say it's a parent, sibling, best friend, coworker, whomever it might be. We're looking for someone that has a credit card that's 10 to 15 years old or longer. The longer, the better. This is the problem we're trying to solve, from no history to huge history. So this person is going to call the 800 number in the back of their credit card. They're going to tell the operator that they want to add you as an authorized user. They're going to give them your full name and social, so you guys are probably together. Once you get added to the card, the operator will probably ask if they want to issue you a copy of the card. Not needed for it to report. They can just say, no, I just want them as an authorized user. They don't need an actual copy of the card. So whether it's a Visa MasterCard, whether it's a store card at the mall, there's no risk to this person who's adding you. You can't go to the mall, you can't get a cash advance, you don't know the account number, you can't call up and do anything. The only difference is this card is going to start reporting on your credit like you've had that credit card for 10, 15, 20 years. It's absolutely the number one silver bullet to fix anyone's credit when they're lacking these key items. Now, regardless of your credit situation, let them know nothing bleeds back to them. In fact, if I was looking at that person's credit report, I would have no idea that they added you as an authorized user. And then lastly, for people that really have no credit history or super limited credit history, is getting some secured credit cards. If you're below a 650, 640 credit score, you may have trouble just signing up for a free credit card. In this case, we have secured credit cards. There's all the different credit card companies, all the banks, your local bank even, will offer a secured credit card. You basically give them $300 to hold on an account, and they give you a $300 credit card. So there's no way they can lose. You can't not pay them back, or they'll just keep your money. But what happens then, that starts reporting on your credit bureau and starts building your own positive credit history. That's what we refer to as building the muscle, which should be more than enough to get your credit score over 580 or even higher, which will make you available for a lot of the programs that we need in order to get you into a new house. Now let's switch gears to the trim the fat part, okay? This is what most people fixate on. They had a medical collection 5 years ago and they think that's why they can't buy a house. Number one, with medical collections, they don't matter. You can have over $1 million in medical collections. It will not get in the way of you buying a house. In addition, charge-offs are not considered as part of the credit underwriting process. Basically, with a charge-off, that creditor has washed their hands and forgotten about you. You can basically ignore it. In addition, any collections up to $2,000 we can ignore. Anything beyond that, we just attach a small payment. So as long as you have some decent income to go with it, you shouldn't miss a beat. To get a little extra credit, we can dispute a lot of these negative items. The Fair Credit Reporting Act allows you to dispute anything you want on your credit bureau for any particular reason. The account number is wrong. That's not the date I opened it. That wasn't the balance. You can come up with anything you want in order to dispute any of these items. What we would do in that case is you would dispute those not to the original creditor, nor to the collection agency that's probably reporting it. You would dispute these directly to the credit bureau. They then go to the collection agency that's reporting it and asks them to prove all the items we talked about on that particular account. That collection agency has 30 days to prove it in writing. Most of these places just let the 30-day clock run out, so on that 31st day, that item will get removed. If they do try to respond back, if they don't have all their ducks in a row, or they admit that they bought it as a collection, poof, the item is deleted from your report. Now keep in mind, each of these items might only add a few points to your credit score. Getting 2 great authorized users when you don't have a lot of credit, that could add 60 to 80 to 100 points to your credit score. So the majority of what we're talking about is adding the beef, adding the muscle to your credit report, taking care of some of these negative items. Maybe we get an extra 5 to 10 points. Now, if you're right at one of those tiers, if you're at $699 and want to get over 700, or at $599 and want to get over 600, then we'll be glad that we took care of some of those negative items. Now, I know it gave you a lot, so if you want to talk more about that or put your own individualized credit repair plan together, go ahead and reach out at the phone number or the email attached to this, and we'd love to work with you and get you into a home. Thank you for watching another episode of Homes, Loans, and Ice Cream Cones. I'm Scott Thompson. I'll see you next time.